Warren Buffett said the best investment you can make is in yourself. The more you learn, the more you earn. I never thought I would start a YouTube channel on Tesla, and I certainly didn't think it would last a week. And like Warren Buffett said, the more I started to invest time into doing this, the more I learned. Hi, I'm Jonathan, and I don't own a Tesla, but I do own Tesla stock. This isn't financial advice, but I am sharing what I've learned to help me start this YouTube channel and hopefully shed a little bit of light on Tesla. We're going to learn about what makes Tesla so special and so unique, and of course we're going to dive into the daily Tesla Twitterverse and see what we can learn from the daily tweets. So let's jump in. So our first tweet comes from the Whole Mars catalog today, and they say, seriously, the second recall in 1 month? Legacy auto sucks at Elon Musk. So the blog today references Polestar's issuing a second recall of nearly 4,600 vehicles. So as JPR007 also tweets, this involves replacement of faulty inverters on most delivered customer vehicles, Polestar said, adding that the inverters transform the energy stored into the battery into power for electric motors. So all this shows is that no automaker is free from recalls. We know that Tesla had a recall issue in China last week. We know that other car manufacturers have recalls all the time. One differentiator between Tesla and the rest, however, is that yes, this one was a hardware problem, but even the first problem with Polestar was a software problem. Where other manufacturers actually have to have their cars brought into the service center, Tesla's able to do over-the-air updates to their software to fix those type of issues. So our next tweet comes from Alex Voigt. He says, Volkswagen year-to-date 2020 versus 2019, minus 16.7 revenue, less 18.7 unit sales, and minus 87.5 profit. That's a really bad year by all measures, and we do know that COVID had to do something with it. However, what Alex is saying is you express your satisfaction for the year 2020. He finds it strange because even though these are terrible numbers, Volkswagen came out and said, hey, we're having a great year. Also, they had an outlook for next year, which is also a lower guidance, and they're still saying that it's a win. Alex suggests that it's probably due to them trying to keep shareholders, which probably is true, but at the same time, it's a strange move by VW to come out and say, hey, great year. I think this goes back to an earlier episode where I mentioned that with Tesla, they're quite transparent whether they're doing a good job or a bad job. When one Twitter account commended them on using their capital expenditure well, Elon did say in 2017, we didn't do a great job, and so I appreciate that. Our next tweet comes from Tesla the Big Long. Imagine competing against Usain Bolt and giving him a 5-year lead in the race. Traditional auto is so far behind that you can't even see them with a telescope. Yesterday, we took a look at the inner parts of the cars from a Tesla versus some competitors, and we noted that Tesla is about 6 years in advance. That's before FSD, that's before new battery technology. So Tesla's quite far ahead, and I don't think they're slowing down anytime soon. They're definitely not slowing down the same way that Usain Bolt slowed down at the finish line. So this next tweet is from the same account. They say, it will admittedly take some folks longer to transition to Tesla. Eventually, Blockbuster closed its doors and folks had to move on. Traditional auto reminds me of the Blockbuster model. Well said. And so one thing that I've noted before is just remember how Apple came out and blew away the competition? It seemed that overnight, pretty much you had Nokia and BlackBerry lose their market share and lose it to the smartphone revolution. In the same way, I do think that Tesla is very quickly on its way to revolutionizing the auto industry. The way that you're seeing inflection points between traditional automakers and Tesla is very telling, and I do think that over time, you won't even remember what traditional automakers are doing. At first, everyone laughed at the e-commerce direct-to-consumer model that Tesla had of selling their cars. Well, now no one's laughing when rent is so expensive and you're not really making those sales on those cars anymore. Now, the next tweet comes from my favorite account on YouTube right now. His name is Ken of Chicken Genius Singapore. He says, biggest risk to Tesla. Number 1, cars will remain too expensive. Number 2, could run out of batteries. Number 3, low gas prices. 4, increase EV competition. 5, Tesla may never recoup massive capex. 6, a part-time CEO. This is just absurd to me, and I'll just leave it there. As Ken would say, don't be a donkey. Okay, next tweet comes from Gary Black. He says, Tesla stock behaves far more like a tech stock than an auto stock. Number 1, volume growth of 40% plus. Yeah. Number 2, single brand. Number 3, sells directly to consumers, not through a dealer network like we mentioned. Number 4, edge derives from software and technology rather than marketing. This is true. Tesla actually scrapped their PR and marketing departments. Now, to me, that might signal that they think they don't need any type of advertising to sell their products, Maybe true, but ultimately I do find that Tesla is very smart in the way they're doing it. So what Tesla has done instead is not have an in-house centralized way of marketing. Instead, they've mobilized the retail investor, they've mobilized Twitter users and YouTubers to actually market on their behalf. Brilliant move, Elon. And number 5, Gary says that they've reduced prices strategically to build more scale. And you do see a lot of that in software sales and other types of tech companies. And by reducing the cost, they're able to leverage network effects and allow more people to actually feed into the AI and get their efficiency even higher. And our final tweet today comes from Ross Gerber. He's a financial analyst and he is a Tesla bull. He says, stocks seem to rally into earnings and then sell off. You're in the same place you started the month. Think long term. Don't trade around earnings. Fool's game. Now, this isn't financial advice, but I agree with him, and this is what I would do with my own investments. I don't trade around earnings and I buy and hold. The reason is I'm not that smart, and so I don't think I can time the market. Rather, time in the market is much better as a method. What I've been doing instead is dollar cost averaging. Whether it goes up or down, I buy on the dips, and that way I can kind of protect myself and still be a part of the momentum that is Tesla. So that's it for today's wrap up. Thank you so much for watching. If you're new to the channel, please consider liking and subscribing. And if you have anything you want to talk about, please leave them in the comments below and I'll be sure to get back to you on that. Have a great weekend, everyone, and I'll see you tomorrow. Bye.